Hello everybody, welcome to today's Fundamentals. Hello Peter.
Hello.
What's new in the markets today?
Well, we had a continuance of the strengthening of the US dollar, which was more or less caused by an intensification of the market's cautiousness. I would note that it was characteristic that we had US stock markets being in the reds. All three major indexes, the Dow Jones, S&P 500, Nasdaq, all landed in the reds yesterday, and for a second consecutive day. I would highlight practically that we had a number of major US banks issuing warnings about a possible recession, including JP Morgan and Goldman Sachs. And practically, the banks are worried that inflation is to continue into the coming year as well, and that may erode the purchasing power of the average US consumer, which could practically lead towards a recession. Also, the Fed's hawkish intentions tend to intensify such expectations. And practically, the banks have stated that US businesses are still solid, still doing well, but it's questionable whether they will be able to hold out the next year. So that's going to be a big issue. And definitely that's more or less increasing the market's awareness of such a possible recession. And we may say that the US dollar may draw more safe haven inflows should that sentiment be maintained over today as well. That would be one. The second issue would be definitely from China, the easing of COVID measures. Now, it's not an easing as such, but the tone is shifting from Chinese officials towards that easing, which generates some hopes that there will be a boost of economic activity in the second largest economy of the world, and thus may avoid practically a global economic slowdown. So that's a positive. Other than that, I would be noting that we have Euro officials, actually ECB officials, which yesterday stated that the bank may have to proceed with more rate hikes. But at the same time, they also implied that inflationary pressures in the Eurozone may have peaked or are about to peak, which was a positive. Note that the statements were made a week before ECB's monetary policy meeting, at which meeting the bank will have to tackle practically quantitative tightening, or at least lay out the terms of such a tightening. So more or less, I would say that the comments tended to show an easing of ECB's hawkish stance. But for the time being, we expect the bank to proceed with another rate hike and, once again, lay out the terms of a possible quantitative tightening.
And how about oil prices?
Oil prices dropped for a second consecutive day, heavily. And I would note here that the cautiousness of the market more or less tends to weigh on oil prices as well. Because imagine should economic activity slow down in the US, that could lead to lesser demand. So practically, despite the supply side being rather tight, we have worries for the demand side, which tend to drive oil prices lower. And at the same time, I would note that we may be having some conflicting messages that come from China as the Chinese are practically easing the COVID measures. That could, in reverse, lead to higher demand. For the time being, though, the sentiment on oil remains bearish. I wouldn't be surprised to see WTI's price actually dropping even further, which may have ripple effects further.
And what's on the calendar for today?
Well, we had already a number of releases. I would be noting that just about now we're getting Eurozone's GDP rate for Q3. In the American session, we're getting from the US the EIA crude oil inventories figure. It's a weekly figure, I would note that yesterday we had the AP weekly crude oil inventories figure, which showed a substantial drawdown in the US oil market. It was over minus 6 million barrels. And that tended to solidify the expectations of the market that the US oil market is rather tight, more or less implying that demand exceeded production levels once again. Should that be reaffirmed also in today's EIA crude oil inventories figure showing another substantial drawdown, that would imply once again some, I wouldn't say bullish tendencies for oil market, but at least that could slow down the bears if not hold the drop of oil prices. So it's going to be, I wouldn't say critical, but important at least. Now during tomorrow's Asian session, we note from Japan the current account balance. I would be highlighting also Japan's revised GDP rate. That's for quarter 3. It's expected to improve somewhat, say from minus 1.2% year on year. It's expected to go to minus 1.1% year on year. Now the improvement as such theoretically should be a positive for JPY, but we have to bear in mind here that the GDP rate is deep in the negatives. So we are talking about a confirmation of the contraction of the Japanese economy, which is not exactly good news, is it? So I would expect to see some mixed feelings here for JPY, maybe even some weakening. Last but not least, I would be highlighting Australia's trade data. We had, during today's Asian session, already China's trade data coming out, and they showed a very narrowed trading surplus, lower than 70 billion US dollars. We had a very deep contraction of the import growth rate. And mind you that the Australians are exporting a high amount of raw materials to China. So the outlook for Australia's trade data, despite being for October instead of November as they were for China, and it's not exactly good. It's expected to show that the trade surplus is about to shrink slightly, and that could weaken those somewhat. However, once again, we highlight here the downside risks of the release.
And how about the monetary front?
On the monetary front, definitely BOC's interest rate decision stands out. Now, the bank is expected to hike rates. There is some ambiguity about the size of the rate hike. CAD OIS imply by around 70% almost a 25 basis points rate hike. On the flip side, a number of analysts are highlighting the possibility of a 50 basis points rate hike in order for the bank to curb inflationary pressures in the Canadian economy. So that's going to be, I think, a big issue. Should the bank actually proceed with a 50 basis points rate hike and issue an accompanying statement which will be characterized by a rather confident hawkish tone, that could provide some support for the CAD, or at least stop the CAD's weakening. Mind you that the CAD had been adversely affected from the cautious market sentiment because it's considered to be a commodity currency and thus it's sensitive to the market sentiment. But also CAD has been drawn lower by dropping oil prices, given that Canada is a major oil producing country. So should oil prices drop, that would mean that the income for the Canadian economy would drop as well. It's going to take a big rate hike and a very hawkish, confident accompanying statement for BOC to actually reverse the weakening of the CAD, but it's still possible. Anything less could be deemed as dovish, and in that case, we may see the CAD retreating.
Any final comments?
It's going to be interesting to see how US stock markets will be opening today. Should we see that the cautious sentiment remains, I would expect another deeper day for US stock markets, while on the flip side, the greenback may draw more safe haven inflows.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
Welcome to the technical analysis part of the presentation for today. In front of your screens, you have the 4-hour US dollar index chart. All the charts which are to be presented are to be of the same time frame in a way. Should note it unless otherwise stated. And we see that the US dollar index has been on the rise for a second day. During today's late Asian, early European session has started to correct a little bit lower. Yet before we make any other comments, let's first make the necessary corrections. Definitely the 105.25 resistance line has to be now reversed to a support line as the price action has broken above it. Let's go hunting for a new resistance level. I would be placing it on this peak here, and that would be the, in red, 110.85 resistance level. Let's correct also the labels. And it's the S3 is now being placed at 101.30. The S2 at 103.50. The S1 at 105.25, which used to be a resistance line, but given that the price action has broken above it, now turns into support line. First resistance line now being placed at 107.15. Second resistance line at 109.10. And final resistance line being placed at 110.85. Now the US dollar index seems to be on the rise. We tend to maintain that bullish outlook as long as the price action remains above the upward trend line we have just drawn. It was initiated practically the day before yesterday, Monday. On the flip side, though, we have to note here that the upward trend line is being put to the test right now as we speak. And should the upward trend line be broken, we would expect initially the US dollar index to stabilize, possibly revolving its price action around the 105.25 support line. On the flip side, should it bounce on the upward trend line, we may see it aiming, if not even testing, the 107.15 resistance level. Mind you that volatility seems to be on its low sides today. So that should be taken into account as well. On the flip side, should the bears take over, we may see the price action dropping, clearly breaking the upward trend line to mention, breaking also the 105.25, yet I would require a lower true than this one here. So I would expect the price action to drop, and possibly hit the 103.5 support level. That would be a very, very intense bearish scenario. Let's move now to Euro USD. Euro USD, which maintained a sideways motion, revolving its price action around the 1.0485 level. We tend to maintain that bias to be continued practically for the sideways motion in the coming 24 hours. It's characteristic also how the RSI indicator revolves around that level. Nonetheless, should the bulls take over, we may see the price action rising, breaking the 1.0605, which was aimed for here, and start aiming for the 1.0785. On the flip side, should the bears take over, we may see the price action dropping, breaking the 1.0485, and aim, if not even test, the 1.0295. Drilling now to cable. In a similar motion, however, it seems that there is still a downward trend. Let's have a look at it. The price action has just dropped below the 1.2150, and the downward motion seems to have been broken. On the other hand, note also the wider trend here. So it's a meeting point. For the time being, we may see the pair stabilizing, remaining near the 1.2150. Mind you that the RSI indicator is just below the reading of 50. It's at 47. Yeah, it seems to be having some slight bearish tendencies here. But overall, I wouldn't say that it's conclusive. On the contrary, it seems to remain more towards the sideways motion. Should the bulls take over, I would expect the price action to rise and test, if not even breach, the 1.24 resistance line. On the flip side, should the bears take over, we may see the price action dropping, breaking the and even breaking the 1.1940 support line, a level which was tested substantially in the past weeks. So it should be noticed. Also note how it was tested to the upside here and here. Okay. Let's move to USD JPY. USD JPY, despite some stabilization, which tends to confirm the upward trend line, it moved higher. So we shift the upward trend line to the right, and you can see how it's currently testing the 137.50. We tend to maintain our bullish outlook for the pair as long as the price action remains above the upward trend line. I wouldn't be surprised to see it breaking above the 137.50 and start aiming if not even reaching the 139.65. The RSI indicator is above the reading of 50, cracking a little bit lower, but it's at 57, which also tends to imply a slightly bullish sentiment on behalf of the market for the pair. Yet should the pair stabilize, given also the lower volatility, we may see the price action remaining or evolving, if you prefer, around the 137.50. While should the bears take over, we would expect a clear-cut break of the upward trend line and the price action to start aiming, if not even reaching, the 135.80. Let's move to USD CHF. USD CHF, which in contrast to USD JPY, which showed some bullish tendencies, remains pretty stable above the 0.9395 support line. The RSI indicator is running just along the reading of 50, implying a rather indecisive market. So practically we have most signals coming out for a sideways motion to continue, probably at the same level. Yet should the bulls take over, we may see the price action rising, breaking the 0.9495 and start aiming for 0.96. The flip side, should the bears take over, I would require clear breaking of the S1 0.9395 and the price action to start aiming for 0.9285. It's a level which more or less has been tested in the past. Let's have a look. Here. And here. And here. And to the upside. Here. So it's pretty valid, I would be keeping it. But note how the price action was not able to break below the 0.9395 since April. Let's have a look. Yep, tested here. Again, tested, broken just below it. So I think bears are going to be having second thoughts before actually breaking the 0.9395. It's something which did not occur, with this exception here recently, for 8 months. Once again, bias for the sideways motion remains. Should the bulls take over, we may see the price action rising, breaking the 0.9495 and start aiming for 0.96. Should the bears take over, we may see the price action dropping, breaking the 0.9395 and start aiming for 0.9285. Let's move now to mother currency AUD/USD. There we go. Some slight bearish tendencies still present. Yet overall the price action lowered its volatility and it's quite practically still in the ruins of the R1 and the S1, 0.6795 and the 0.6640. I would be highlighting though the RSI indicator here. In this case, the RSI indicator is closer to the reading of 30, it's at 38 right now, rather than the reading of 50, so there may be some bearish tendencies present here. Should that be the case, and given that the price action seems to be scoring consecutive lower peaks, lower truths in the past 24 hours, something which becomes more evident in the 1 hour chart like here. One peak, second peak, third peak, one show, second show. So it seems that it has started a descent lower, back to the forward chart, and should the balances be more established, we may see the price action dropping, breaking the 0.6640, start aiming for 0.6545. On the flip side, should the bears fail to actually take over, we may see the price action stopping short of the 0.6640 and stabilizing in this area here. For a bullish outlook, I would require a clear break of the R1, 0.6795, and the price action to start aiming for 0.6915. Interesting chart. Let's have a look at commodity currency pair USD CAD. USD CAD, which maintains a nice upward trend line, which cannot be neglected. It has broken above the 1.3685 resistance line, so that should turn now into support line. Let's go hunting for a new resistance level. Loosening the chart. We are back in December last year and still nothing. Drilling out to the daily chart. Okay. So we see that there have been consecutive lower peaks here. I'm going for the first one. In red. And that would be the 1.4135 resistance level. Locking it in. It's pretty wide, but you can see that the price action is moving decisively higher. Going back to the forward chart. Now, some of you suggest that the S1 should be lowered. Yeah, I would agree. Nice touches here and here. I would keep that one. While the S3 could also be lowered. Actually not. I'm keeping that. Let's correct the labels as well. First support line now is being placed at 1.3395. Second support line being placed at 1.3570. First support line being placed at 1.3685 as it has been broken. First resistance line at 1.3805. Second resistance line at 1.3975. Final resistance line being placed at 1.4135. The bullish outlook is still present, yet we have to keep in mind here, in my opinion, three elements on a fundamental level. The first element is BOC's interest rate decision. Should the bank actually proceed with a 50 basis points rate hike and actually maintain a hawkish tone, that could provide some support for the Canadian dollar and reverse the past direction, at least stabilize it. On the other hand, we have a market sentiment which remains very cautious, and that's good for the US dollar, bad for the Canadian dollar. As practically the US dollar is receiving safe haven inflows, while the CAD is considered to be a more risky asset given its nature as a commodity currency. Finally, I would be noting also the drop of oil prices, a drop which has been reignited today and tends to weaken the Canadian dollar, as that would practically imply that Canada, as a major oil exporter, benefits less from trading the commodity. On a technical level, definitely the upward trend line stands apart. It's the main element providing some bullish signals. The second element would be the RSI indicator below the 4-hour chart. The RSI indicator is above of 70. On the one hand, underscores the bullish sentiment of the market for the pair. On the flip side, though, may also be implying that the pair has reached overbought levels and may be ripe for a correction lower. Should the bulls maintain control, I would expect the next stop to be at the 1.3805, practically due to this peak here, while even higher we note the 1.3975 and the peak here. On the flip side, should the bears take over, I would expect the price action to drop, break the 1.3685 and start aiming, if not even breach, the 1.3570. Even lower, we note the 1.3395. Small correction here. That's it. Moving now to commodity currency NZD/USD, which we have not checked for a while now. Now the Kiwi has risen, aimed for practically the R3, 0.6460, yet retreated lower. Main element here is though that the 0.6290 resistance line has to be turned down to support line. Let's go hunting for a new resistance level. I think this peak here is just about right. And that being placed at 0.6575. Let's check 0.6570. Yeah, that's better. Keeping it. Widening the chart. Let's make the corrections now on the labels. We're making a start with the S3 being placed now at 0.6060. Second support line being placed at 0.6155. S1 now being placed at 0.6290. R1 being placed at 0.6380. R2 being placed at 0.6460. And the R3 at 0.6670. Sorry, 0.6570. There's a nice tight range-bound movement by NZD-USD. We expect it to be maintained, given also that we have RSI indicator running along the reading of 50. Should the bulls take over, we may see the price action jumping, breaking above the R1 0.6380 and start aiming for 0.6460. On the other hand, should the bears take over, we may see the price action dropping, breaking this 1 0.6290 and start aiming for 0.6155. Let's have a look at oil's price, which has had some movement. You can see that the bearish tendencies are still present, albeit they slowly but steadily ease. I think it's going to be more obvious in the 1 hour chart. Let's have a look. Okay, yep. You can see these corrections once, then. But there's steady flow downwards, marking lower peaks and lower troughs. But the differentials between the lower troughs and the lower peaks is shrinking. And that may imply that the bears are slowly but steadily getting tired here. Okay, let's move back to the 4 hour chart. The 75.40 support line turns to resistance. Let's go hunting for a new ultimate low. I'm picking the show here, which was also tested here. Seems valid. And that would be in green. 66 support line. We're adjusting the chart. Let's correct the levels as well. R3 is now being placed at 83.50. R2 is being placed at 79. Give me a sec. Let's put this. The R1 being placed at 75.40. The S1 being placed at 72.35. The S2 at 69.25. And the S3 at 66. Locking everything in. Let's extend now the downward trend line. Now, should the bears maintain control over the commodity's price, I would expect the price action to break below the 72.35 within the next 24 hours, maybe even earlier. In which case, we may see the way being paved for the 69.25. On the flip side, note how the price action is testing the downward trend line. Should that be broken, yet the price action at the same time respects the 72.35 support line and the 75.40 resistance line, that would imply a sideways motion between the mentioned levels. On the flip side, should the bulls take over, we may see the price action breaking the downward trend line, reversing direction, breaking the 75.40 resistance line, and start aiming for the 79 resistance level. The RSI indicator is at the reading of 30, underscoring the bearish sentiment, yet may also imply that the bears have overreached themselves a little bit and the pair may be ripe for correction higher. That should not take us by surprise. On the other hand, we have to note that the price action has some distance from the lower Bollinger Band, which may allow the bears for some room to play here. Mind you that the price action right now is pretty near to a further reversal of the downward movement of the commodities price. That was on the 28th of November. Very interesting level. I think we're nearing a make or break position here for oil's price. And the fact that they have reached this low once again after 3 weeks almost would be a signal for the bears to pause their action. But as long as we see that the downward trend line remains intact, the bearish movement, the bearish outlook for WTI's price remains present. Let's have a look also at US stock markets, which have dropped for a second day yesterday. It's beautiful how the price action has practically tested the 33,470, but this time to the downside as a support line. Let's go hunting for a new resistance level. Okay, this practically verifies the R2. The circles are no longer needed, so we could delete them. Moving further to the past, there's one peak here, another peak here. I'm choosing this one. Okay, the distance between the R2 and the new R3 are pretty narrow, but I don't mind that. In red, that would be the 36,460. Let's readjust the chart. $35,000 100. I think that's not correct. Let's check it. Yep, it is. And the 34,275 level, which is being currently tested, would be the 33,470. Ouch, that was a mistake. That's correct. There we go. S2 is being placed now at 32,670. We could do something. I'm going to be widening the S3 as well as the S4. Somewhere here. And that would be the 31,730. Locking everything in. Now we see that there is a clear downward motion. And it's over the past 2 days, if I'm correct. Let's drill out to the daily chart. Yep, it's the third day now. But should the bears maintain control, which is our expectation as long as the price trend remains below the downward trend line, I would expect the price action to drop below the 33,470 and start aiming for the 32,670. It's a wide distance, I know, but it's quite possible. So that should conclude it from all of us here at IronFX. Best wishes for solid trading.
And welcome to another video. Today we'll be looking at take profit orders. This type of order is a type of pending order that is used to realize the profit when the price reaches a certain level. The execution of this order results in the closing of an open position at a specified market price. The purpose of take profit orders is to look in any incurred profits. For example, a trader enters a buy position expecting prices to go higher. In order to benefit from the rise, he will place a take profit order at a level higher than the entry price. If the bid price reaches the predefined take profit price, the position is closed and any profits are locked in. If a trader enters a sell position expecting prices to fall, he will place take profit order at a lower level than the entry price in order to benefit from the fall. If the ask price reaches the predefined take profit price, the position is closed and any profits are locked in. The benefit of using a take profit order is that traders don't have to worry about manually executing a trade. Take profit orders are executed at the best possible price regardless of the behavior of the underlying asset.
guys, before we start webinar today, I hope everyone is ready to learn. Our topic for today is to know your charts. Okay, hold on, give me a moment. Okay, is to know your chart, which is the Heiken Aishi. So we're gonna be understanding the Heiken Aishi today. Before we start, I just want to remind you guys that today's webinar is only educational. It is for educational purposes. Anything I share in this webinar should not be construed as trading advice. Trading may not be suitable for everyone, so do be cautious, especially if you are new to the game. Okay, if you have questions throughout the webinar, you can ask. You don't have to be shy. The whole point of these webinars is to guide and assist you guys. Okay, cool. I'm going to move on. Okay, so I'm gonna introduce myself, a little bit about myself. My name is Cassandra. You can call me Cass. I am an investment analyst for the award-winning research firm at Fortune Group. I'm also a prop trader. So, I mean, that's a little bit about me in background. I work in the bank. I work with the airlines. I was an air hostess. I majored in law and majored in business. But I think more importantly, when it comes to trading, my experiences in trading is that one thing that I am quite proud of is that I have passed multiple prop trading tests. So these prop trading tests, I'm not sure if you guys have heard of it. Such companies are FTMO or MyForex funds. So to pass these tests, you will require a trader would require to do 8 to 10% a month without touching the drawdown of 5% a day and 12% throughout the entire challenge. So I've passed those tests multiple times, and I've used that with identifying key levels of reversals through combinations of supply, demand, and Fibonacci confluence while using trend as my main decision maker. Okay, this is important because our topic for today, which is the Heiken Aishi has a lot to do with trend. Okay, so it's going to be very important in identifying entries. Okay, so our agenda today will be to understand what the Heiken Aishi is. I really don't know if I'm pronouncing it right because it is a Japanese word. The best bet I have is that it's called Heiken Aishi. Okay, I know how to use it, just don't know if I'm pronouncing the name right. How is it different from the normal candlesticks? Okay, how to use it in trading? How can we use this with different indicators? And finally, we will be crafting a strategy using the Heiken Aishi. Okay, any questions so far? Okay, cool. Okay, so what exactly is the Heiken Aishi? Can you guys let me know in the chat box if you guys have even heard of the Heiken Aishi before? Do you know what it is? Do you have any idea? No? Okay, never heard of it. Is the chat box disabled? Okay, hi Christine. I don't think it's disabled. I do see your message. But the funny thing is, I don't know if the others are able to answer me because I've been asking for the last 10 minutes since I started if everyone can hear me clearly, if you guys can see my screen. Usually, you guys are very active in answering, like, yes, I can see your screen, I can hear you clearly, but today no one's answering, so I don't know if there is something wrong with the chat box. but the fact that I can see Christine's answer means that it should be okay. Okay, now I see Victor's answer. Okay, thank you. Brian. Okay, Brian was saying that he did answer, but I wasn't responding to his answer. So I'm guessing the chat box is not working well, but you guys are talking to me on the Q&A session. So with Zoom, there's two places that you can send in your question or you can talk to me. One is via the chat. Okay, so I'm guessing you guys were talking to me through the chat earlier on. That's why I wasn't seeing your response. And now I see Christine, Victor, and Brian answering me on the Q&A section. So if you guys have any question, just go straight to the Q&A box and ask at the Q&A box. Okay, thank you, Victor, for clarifying that you can hear me and you can see my screen. I was so worried the entire time. I wasn't sure because usually you guys would have answered me by now. Okay, so what exactly is the Heiken Aishi? So Heiken Aishi also spelled with an E sometimes. So it's sometimes spelled with Heiken. Ashi means the average bar in Japanese. So it literally means average. A lot of what I'm going to share with you guys in the front part of the webinar will be a bit confusing. It was confusing for me as well when I just learned this, but it's not important. More importantly, you need to know how to use the Heiken Aishi. Okay, so it's going to be confusing, but it's okay. It's more to like, it's good to know. The information I'm sharing is just more like good to know. Towards the end of the webinar, when we craft our strategy, that is the important part. That's the important part because then you will learn how to apply the Heiken Aishi. So the Heiken Aishi technique can be used in conjunction with candlestick charts when trading to spot market trends and predict future prices. So how Heiken Aishi is used, for me especially, I mean, I'm sure there are many ways to use it for different traders, but how I use it particularly is to spot trend. It is so crucial. You know how a lot of time price is going in an uptrend, it's going in a constant uptrend or going in a constant downtrend. For example, I can give you guys XAUUSD right now, gold. Gold has been going in a downtrend for the longest time. Okay, another one is EUR-USD. The euro has been going down in a downtrend for the longest time, right? So the Heiken Aishi can actually help you spot that point of reversal and get in at the reversal. So as it's going down, it will make a reversal to make the recovery to go up. Using the Heiken Aishi, you'll be able to spot where to get in for the buy. Okay, sorry, I do see messages here. Let me try to figure this out. Okay, cool. Okay, so it's useful for making candlestick charts more readable and trends easier to analyze. For example, the trader can use Heiken Aishi charts to know when to stay in trades, when a trend persists, but get out when the trend pauses or reverses. Okay, so we're gonna look at examples for that later. Most profits are generated when the markets are trending. So predicting trends correctly is super necessary when you are using this technique. Okay, let's move on. So this is the normal candlestick pattern, and you can see this is the Heiken Aishi. I know it looks like when you look at the structure of it, it looks quite similar, as in you can see there's a low here, you can see price did a swing low here, you can see price did a swing high here. But if you look closely, the difference with the Heiken Aishi and the normal candlesticks is that the Heiken Aishi starts in the middle of the last candle. Do you see? So it's very confusing for people who only know the normal Japanese candlesticks. So normal Japanese candlesticks, you can see that, for example, the close was here, right? The close was here and the open is just next to it. There's rarely a gapping when it comes to Japanese candlesticks. But with Heiken Aishi, no matter where the close and start is for the normal candlesticks, with the Heiken Aishi, you can see that the start is usually in the middle of the last candle. Okay, it is more often not in the kind of like the center of the last candle. So it can be confusing for people who don't understand this candlestick, this type of candlestick or way to read the charts. Okay, so I'm going to explain a bit the textbook meaning for Heikin Ashi and a little bit of understanding. So the Heikin Ashi is the type of price chart that uses average to show the price movement of an asset. This chart used as a form of technical analysis to look at the asset's price movement with regards to overall trend. By being able to see the overall trend more clearly, you can make a better informed decision about whether to enter or exit a trade. Like regular candlesticks, the Heikin Ashi candle will display 4 different price level, which is the low, okay, the highest point, the opening, and the closing of the candle. But it will use data from a current and previous session to derive the values. That being said, the Heikin Ashi charts can be applied to the same time value as regular candlesticks charts, making them useful as part of a scalping, day, or position trading strategy. A lot of people also use it for swing trading, as can be seen in the below. In this comparison, that can actually have a smoother appearance than regular candlesticks. Okay, it's smoother because it always just starts in the middle of the last candle, or somewhere in the middle of the last candle. Okay. Okay, so what is the Heikin Ashi formula? Why does the candle start in the middle of the last candle? So the Heikin Ashi formula is a method used to calculate each candlesticks on the chart. Some of the formulas or calculations are more complicated than those used for a standard candlesticks. Here's simplified version, okay, of how to calculate the open, close, high, and low for Heikin Ashi candlesticks. So the open, which is here, the open of the candlesticks, it is the equivalent to the open of the previous bar. So you need to get the information from the previous candlesticks, okay, plus the close of the previous candlesticks, and you divide that information by 2. Okay, so okay, let's pretend this is a current candlesticks, this is the open. So you're getting the high and the low, the open and the close, and then you're going to divide that by 2. The answer of that will give you the open for the next candlestick. Okay, that's why this that's why the HA, the Heikin Ashi, always starts in the middle of the last candlesticks, or somewhere in the middle of the last candlesticks. Okay, because it is just like the average of the last candlesticks. Okay, so the close will be the open, the close, the high, and the low of the current candlesticks, and you divide that by 4. Okay, again, for those who are confused, don't worry, you don't really have to remember this. Whatever I'm sharing is more like, it's just good to have, like, it's good to know, right? It's good to learn this information, but it's not like crucial when you're doing charting. Okay, so the high is the maximum value from the high and the open or close of, hi Simone, I see more and more people joining, the current period, and the low is the minimum value from the low, open, and the close of the current period. So how do you read a Heikin Ashi candlesticks? When reading a HA candlesticks, you look at their wick, body, and color. Okay, so the color, it's either green or red. Okay, the wick, you need to know if the wick is on the top of the candlesticks or the bottom of the candlesticks. I know right now it just looks like both sides had a wick, but later on I'll show you more examples where the Heikin Ashi only wicks on one side. So it usually wicks on the upper part of the candlesticks or the lower part, and the other side that doesn't wick is usually flat. Okay. And the body. Okay, so the top of the upper wick is the highest value of the candle, and the bottom of the lower wick is the lowest value of the candle. The body is the difference between the session's open, close prices. If the candle is green, the closing value is greater than the opening value and is represented at the top of the body. If the candle is red, the closing value is lower than the opening value and is represented at the bottom of the body. Okay, everyone good? Everyone following? Is this too confusing? for those who are like a little confused, you don't have to worry. Like when we go to trading view later, you see how there's actually so many different types of candlesticks patterns. This is just one of it. It's a very useful way to trade, but it's just one of it. Okay, so how to use the Heiken Ashi chart? There are a few ways to trade using the Heiken Ashi chart. First, understand each candlestick will tell you something about the price trend. For example, a long-bodied green Heiken Ashi candle with no lower wick. Okay, you can see that the wick is only on the top. There's no lower wick. Is considered indicative of a strong upwards trend. Do you see how this is so different from the traditional Japanese candlesticks? If this was the Japanese candlesticks, if you see a long wick on the top, you will immediately think, oh, there is a rejection. There's a rejection, that there is weakness. That's why the candlesticks is making this long wick. Okay, it is rejecting. There is a bearish rejection, and you might be thinking, oh, the bearish momentum may be strong. Okay, it is totally the opposite for the Heiken Ashi. The Heiken Ashi is when you see the wick on the top side rather than the bottom side, that is an indication of strong uptrend momentum. Okay, so it is opposite from your traditional Japanese candlesticks. Okay, and this is very important because this is what you use to identify trend when you are trading. Okay, so traders who have bought into the market might use these Heiken Ashi signals as indication to hold on their position in an attempt to maximize gain in an uptrend, because once you see this wicking on the upside, you will see, okay, you will think to yourself, okay, strong bullish momentum, right? Strong bullish momentum. So what you're going to do is you're going to see the next candlestick. If the next candlestick also shows another wicking on the upside, it just means, okay, continuation of that strong bullish trend. And then another one is just confirmation of another strong bullish trend. So the Heiken Ashi, again, like I said, is very, very useful in identifying trend. So you use it to continue playing the trend, or you use it to get out when you see a trend reversal. Okay? Everyone good for now? Okay, cool. I'm going to show you the next example. Okay, so this is an example of how the Heiken Ashi would look like on the charts. Okay, so you will see wicking on the upside. The upside, this is confirmation of bullishness, confirmation of bullishness. So you keep holding your buy entry, right? You keep holding your buy trade. You hold your buy trade, you hold your buy trade, you hold your buy trade until this doji looking thing, or this spinning bottom, spinning top looking thing comes out. And then you see a wick at the bottom side of the candle. That is Heiken Ashi's first sign to you as a trader that, hey, the bullish momentum is weakening. Okay, the uptrend momentum is slowing, or there may be a possible reversal. Okay, and then you see the next candle, and the next candle, true enough, it turns red. Number one, it turns red. Number two, the wick appears on the bottom of the candle, signaling and confirming that yes, the bullish momentum has ended and now the bearish trend may have started. Okay, so this is exactly how you use a Heiken Ashi in terms of playing the trend. I really love the Heiken Ashi, honestly. It's very, very useful. Okay, so let's move on. Okay, so this is another example. You can see really strong downtrend, wicking on the bottom part, which is confirming the downtrend. Bearish momentum, bearish momentum, bearish momentum, bearish momentum, bearish momentum. All the way you can see all this bearish momentum. And suddenly this doji looking thing, or spinning bottom, I would say, candlesticks appear and you see a wick on the top side. Okay, this will suggest, this is the first suggestion. It's not confirmed, of course, it's not confirmed, but it's more like a suggestion from the Heiken Ashi that, okay, trend, that downtrend may be ending, okay, and it is losing momentum, and there is a possible trend reversal. Okay, so the next candlestick comes out, you see the wicking on the bottom side, you're like, no, maybe it was a false alarm, right? And then you see another candlestick, same doji comes out, which gives you another signal. If I was the trader looking at this trend and I see this, I would definitely get out here. This second one was my second warning to tell me that there's a trend reversal. So I will get out and I'll just take my profit, right? There's no point of risking. Okay, so let's move on to the next example. Okay, this is not example. Okay, so to sum up what we've learned with the Heiken Ashi, the Heiken Ashi chart is a type of price chart that uses daily average to show the median price movement of an asset. Secondly, the regular candlestick display 4 different price levels of an asset in a specific period, but the Heiken Ashi candlesticks use data from the current and previous session to derive their values. The Heiken Ashi charts can be useful as part of a scalping, day, or position trading strategy. And when reading the Heiken Ashi candlesticks, the high is the highest value of the candle and the low is the lowest value of the candle. If the candle is green, the closing value is greater than the opening value and is represented at the top of the body. If the candle is red, the closing value is lower than the opening value and is represented at the bottom of the body. So the long-bodied green Heiken Ashi candle with no lower wick is considered indicative of a strong bullish trend, and a long-bodied red Heiken Ashi candle with no upper wick is considered indicative of a strong bearish trend. So because the Heiken Ashi candlesticks show the directional market trend, it can be useful to apply trend indicators, which I will show you later how we can apply trend indicators in order to identify the strength of market momentum. Okay. Okay, we're going to create a strategy. We're going to move on to TradingView to create a strategy. If you guys have any questions, do ask in the chat box. Don't be shy. The whole point of these webinars, the whole point IronFX created these webinars is to help you guys grow your account. Okay, so if you have any questions, go ahead, just shoot. Okay, so let me just pull out what I wanted to show you guys. Okay, so for those, right, who don't already have an account with us, you can head over to vip.ironfx.com/app. Okay, if you don't already have an account, just go to register now. You can create an account as long as you have an account with IronFX. You need a minimum deposit of $250 and you will be able to create this VIP IronFX account. So let's log in. Okay, so what is the benefits of having this VIP room access for IronFX? If you're a bronze, you get to create an account, which is a minimum deposit of 250, 1,000 or 2,000. You get an account. Silver is 1,000 and gold is 2,000. Okay, so what is good about this is that every day we will update this chart. So you can see here, we will update this chart's we'll update the fundamental news. So we'll update, for example, Euro news. So we'll say like the Euro USD rose noticeably higher to finish the trading week. We'll just update on like every day. The last time we updated was Monday. Okay. Then we've got GBP, we've got USD, JPY. Can we obtain the indicators? How can we obtain indicators? I will show you how to use indicators in a bit. We'll be going to TradingView in a bit. Let me just show you the IronFX VIP group. Okay, so on top of that, we also have all these major pairs, commodities, indices, cryptocurrency, forex pairs. Okay, if you just click into any of them, you will see that we do update regularly. We will show you guys like, hey, price is still testing the key support level at blah, blah, blah. So we'll update information about any particular chart. And if you are new here, the good thing about this is because we have so many traders, right? We have a lot of traders on this platform. So you can just like ask one of our trader, our pro trader, for example. Let me show you guys. For example, you can ask trend line. Okay, you can draw a trend line, and then you can ask one of us, hey, Desmond, or maybe hey, Cass. Sorry. Hey, chief trader, or whoever it is who sees your message. Is this a valid trend line? Okay. And then now you can highlight the trend line. You can highlight the trend line, link object text, and click on this trend line. Click confirm, press enter, you send it. So whoever that was tagged, you can tag Desmond, you can tag me, and you say, is this a valid trend line? Whenever I come back, so even if this chart was deleted, if I hover my mouse over the trend line is going to appear, okay, so that I can assist you. So then when the chief trader sees this, the chief trader will reply to you, hey, so-and-so, this is not a valid trend line because a valid trend line requires 3 touches, but in this case, this trend line only has 2 touches, and therefore it is not a valid trend line. Okay, so you can get all the help you need just by creating an account on the VIP, the IronFX VIP room. It is free as long as you have an account with IronFX, and as long as you have a small deposit of $250. Okay, cool. Okay, on top of that, the other thing I want to show you guys is that for those who are new here and need help with trading, especially the basics, please head over to our YouTube page. Okay, just type IronFX on YouTube. We have a lot of videos where we teach you guys like the basics, like it even comes in like different languages. Okay, so we'll teach you things like moving average, for example, or Heiken Aishi for today, the total trading strategy. Okay, so there's a few different things going on. You can just come and explore. It will help your trading a lot. Trust me, I was once a new trader as well, and I wish I had this kind of resources. Back then, I didn't know where to find this kind of resources. I didn't even think to come on YouTube. Instead, I went on to those really, really expensive courses where I need to pay like thousands and thousands of dollars to learn like really simple things like moving average, for example. Okay, so do head to our YouTube. We have a lot of information there. It's completely free. It will help your trading a lot. Okay, so next, let's move on to trading view, where I show you guys how we can use the Heiken IG. Let's choose gold, for example. Okay, let's use gold, for example. We're gonna go, because today's topic is Heiken IG, so we're not going to be using your normal candlesticks pattern, okay? We are going here, candles, click on candles, click on Heiken IG. So there's different kinds of candles that you can use. This candle is the traditional Japanese candlesticks. We've got bars, okay? We've got the line chart, we've got line chart, we've got baseline, we've got high and lows, line breakouts, Kaji, but today's topic is Heiken IG, so I will show you guys how to use Heiken IG. Okay, so click on Heiken IG. It looks similarly to the traditional Japanese candlesticks, but again, it's different. How? Because it starts in the middle of the last candle, and we already know why that is. It's because you take the high and low of the last candle and you divide it by 2, and that will be your opening for your next candle. Therefore, it's always going to be somewhere in the middle. Okay? Everyone following? Do I need to repeat myself? Everyone good for now? Okay, thank you, Joash. Okay, so let's zoom in because this is really important. The way that you use Heiken IG on its own, I will never recommend using a candlestick pattern or a candlestick on its own. Never, ever. You always have to combine it with other things, okay? Always combine it with trend, support and resistance, Fibonacci levels. Please share screen. Thank you. Oh, do you guys not see it? Okay, can you see it now? Thank you, Christine. I'm sorry, I didn't know how long I was talking to myself for. Do you guys see the screen? I thought when I switch screen, it will automatically share. I didn't realize I have to keep sharing screen. Sorry about that. Okay, thank you so much. Thanks, Christine. Okay, so I'm gonna start all over again. So to get the Heiken Aishi, go to this area here. It will say, let me just go back to your normal. Okay, it will say, go to any particular chart. It will say candles, and then you get to choose your different kind of candlesticks that you want to look at. So we've got the bars, candles, hollow candles is your traditional Japanese candles, right? We've got the baseline, the line chart, Renko, line break, Kaji, these are all the different kinds, but because of today's topic, we will be looking at the Heiken Ashi, okay? For today's topic, we will be looking at the Heiken Ashi. Again, it looks like your traditional Japanese pattern, but the only difference is that it starts in the middle. The opening is always somewhere in the middle of the chart. Why? We have already established it's because you take the high and the low of the last candle, you divide it by 2, and you will get the opening for the next candle. Okay, therefore it will always start in the middle, somewhere in the middle of the last candle. Okay. Okay, so just to test you guys a little to see if you guys were following earlier on, I just want to check if you guys remember if the wick of the Heiken Ashi candle is on the top part of the candle, does that signify bullish or bearish momentum? Can you guys let me know in the chat box so I know if you guys are still following, if I need to repeat anything? If you see the wick of the candle on a Heiken Aishi candle on the top part of the candle and the bottom part has no wick, does that signify a bullish or a bearish trend? Thank you, Christine. Thank you, Joash. Okay, thank you. At least you guys were following. This is really important. Okay, so I'll give you an example of how to use the Heiken Aishi. But of course, whenever we are looking for a setup in trading, we never ever just use one thing to look for our entry, our stop loss, and our buy. We always combine it with other things, of course. Always combining with other things. Okay, so if let's say I was already in this buy here, I would see this long wick here. I would think it's a bullish momentum, bullish momentum, bullish momentum, bullish momentum, bullish momentum. I will hold on to this trade until it gets to this doji looking candle, this doji candle, and that's where I get out. Okay, so that's just an overview of how you use the Heiken Aishi on your own one rough way. Now I'm going to show you guys how I use it with my other strategy. Okay, by combining other strategies. Okay, so let's go to the day chart. This is exactly how on a normal day I use to look for a setup. Okay, so as of today is the 16th of November. I am currently 4% in profit in my own trading account. Okay, I'm 4% in profit, and whatever I'm going to show you guys is exactly how I got my 4% in profit. Okay, this is exactly how I would find a trade when I'm trading on a daily basis. Okay, so first of all, I will look for trend. Trend is very important. I feel like looking for trend and identifying trend, you already win half the battle. Why? Because if you identify that it is a downtrend, it means that you are biased to get in for a sell. Okay, if you identify that it is an uptrend, you are immediately biased to get in for a buy. Okay, so you first need to identify trend, and you need to identify it on a bigger time frame, so that when you go down to a smaller time frame, you can narrow down and fine tune where you think your entry is going to be. So how do you identify trends? Simple. The first things first, use a trend line, use a channel, or you can look for lower lows, lower highs, higher highs, and higher lows. Okay, so in this case, a price was moving on a downtrend for the longest time. Okay, so I'm just going to use this trend line to identify the downtrend. And the fact that it's on a lower, it was making lower highs, lower highs, lower highs, lower lows, lower lows, lower lows. It's confirmation of that downtrend that we are talking about. Okay, so one thing that I've noticed is that this downtrend has recently been broken by the recent candle structure. Okay, the recent movement in price. So the thing about not using Heiken Aishi or using candlestick pattern is that usually the traditional way of TA, or the different way of TA, is that traders, okay, so this is a swing high here. When price breaks this trend line and it breaks this swing high here, that is only when the trader confirms, that the uptrend has started and the downtrend has ended. Okay, the problem with this technique is that from here all the way to here, you have lost so many points. Okay, you have lost so many pips. Your entry would have been so late. But if you were to use the Heiken Aishi, right? You use the Heiken Aishi. So the Heiken Aishi, remember, if the wick is at the bottom and the candle is red, it is a sign for bearish momentum. If it's green and the top part, the wick is on the top, it is sign for bullish momentum. Okay, so one thing that the Heiken Aishi would have already told you is that here, in this candle here, is already the possible trend reversal. Okay, why? Because the candle before it, there was wicks on both sides. Whenever there is wicks on both sides, when it comes to the Heiken Aishi, this is the first sign of trend reversal. Okay, this is the first sign of trend reversal. And then how do you confirm that trend reversal? The trend reversal is that the wick is on the top part. So you would have gotten in here for a buy based on Heiken Aishi's confirmation. You got in for a buy, the wick is still on top, the wick is still on top, the wick is still on top. Until today, the wick is still on top. So from somewhere around 1666, okay, 1670, for example, you would have already been able to identify the possible trend reversal. You would have already been in this buy trade, and right now you are still in profit for that buy, and you are still not taking profit yet because Heiken Aishi has not told you to come out from that trade yet. Okay, so that is the beauty of Heiken Aishi. Heiken Aishi is that thing that is able to help you identify trend reversal before all the other things like the break of the swing high, the break of another swing high, okay, all these other things. Okay, so let's combine Heiken Aishi with all the other things. Okay, so how I would have gotten into this trade is that I would have, of course, already identified this trend line. First, I identified this trend line. Sorry, I wouldn't even use a trend line. I would actually use a channel because a channel would be valid in this case, right? That's a really beautiful channel. The break of the channel is my first sign of trend reversal. Okay, this break of the channel is my first sign of trend reversal. But when it just breaks, I'm not confirmed, right? It's not confirmed. So what I want to do is look for more confirmations, because a lot of times it could have just been a fake out. It could be a fake out break and it just comes back into the channel again. Okay, in this case, it wasn't. Okay, so the first confirmation was Heiken Aishi showing wicks on both sides. Second is that the wicks start appearing on the top side of the candle. So channel is showing bullish momentum, a trend reversal. because of the breakout channel. Number 2, Heiken Aishi is confirming that. Okay, let's see what else. Number 3, the break of this swing high is further confirming. If price continues to go higher, if it breaks this swing high here, that is even further confirmation that price is definitely reversing, doing a recovery, and gold is on its way up. Okay, so we're going to wait for price to break this 1798 area. This is a very crucial area. If it breaks here, this is going to be our entry for the buy. Okay, guys, just take note this for future reference. It's not going to be today because I don't think it's going to break today. It doesn't look like it's going to break today. Maybe next week. Okay, this is a very important area. Okay, so after I have identified trend, I'm going to highlight some support and resistance. Let me highlight some support and resistance. Why is support and resistance so important in trading? Support and resistance is your entry, stop loss, and take profit. Okay, support and resistance will be used as your entry, stop loss, and take profit. It is so crucial to be able to identify support and resistance when you are charting. If you cannot master support and resistance, I would think that you are losing a lot. Okay, there's probably other ways to trade, but from my trading experience, I find that identifying support and resistance will win you a lot of the battle. Okay, we've got that. Let's go down to the smaller time frame. Now, what we're going to do is combine. Okay, we're going to combine give me a sec. Okay, before I continue, I want to let you guys know that before this webinar started, I actually placed an order, right? I actually placed an order for a sell at 1785. Okay, why? Because there is a strong resistance here. Okay, so for those who want to consider that sell, I'll let you know in a while why I got into that sell, but I'm letting you know that it's in that area of that sell right now. Okay. Okay, cool. Going back to the Heiken Aishi. Once I have identified that, I've identified trend. I'm right now currently very biased on getting in on a buy. Because why? Because momentum is showing me that it's a buy. The break of the channel is showing me that it's a buy. The break of the swing high is showing me it's a buy. Heiken Aishi is currently showing me it's a buy. So right now, the problem about wanting to get in the buy is that price is already on its way up. So what do we do? The good thing about trading is that price never moves in one direction. Okay, it never ever, it is so rare that price moves in one direction. It doesn't, never forever. So right now it's going up. What is it going to do? More likely or not, it's going to reach a point where it wants to do a reversal, a little pullback. It does a pullback, and that's where your Elliott wave comes in. That's a topic for a different day. Okay, your Elliott wave comes in, and here at the pullback, you get in for your buy. Okay, you get in for your buy here at the pullback. Okay, so where do I think the pullback will be? I think it's at 1720. I will show you guys how I get that number. Okay, so one thing I like about the Heiken Aishi right now is that it is showing reversal signal. Okay, do you see 1, 2, 3, 4, 5, 6? 1, 2, 3, 4, 5. Sorry, 5 candles have shown wicks on both sides of the candle. So again, remember, wicks on both sides of the candle is your first signal from Heiken Aishi that a reversal might be happening. So this area here, okay, Heiken Aishi might be saying, okay, that's enough. It's time for me to reverse now. And the pullback might be happening soon. Okay, so this is where the pullback might be happening. I will be I'm a bit biased to get in for a sell right now. Okay, we're gonna get into a sell, but my overall trend is a buy. And how do I get my take profit? I go back to the normal candlesticks and I find the swing low, the closest swing low. That's gonna be my first take profit. Okay, this is going to be my second take profit if price even gets here, right? If price even gets here, that's great. But if it doesn't, that's my first take profit. This is my second take profit. And either from here, price is going to reverse and continue on its uptrend, or it's going to go down lower and it's going to continue on its uptrend. Okay, whatever it is, because we are just day traders, I'm only going to kind of forecast or kind of want to see where price is going from here to here. Okay, so let's go back to the Heiken Aishi, the day chart. So Heiken Aishi is agreeing with this analysis. Why? Because again, you can see Heiken Aishi is already signaling reversal. Okay, that's one. Number two, it's because if you go back to the normal candlesticks, you can see price tried to come here a few times and it was having a hard time breaking. I don't know if it's gonna break this time, but if it does, then this sell entry is gone. But based on the Heiken Aishi, so far it looks good. It makes me want to believe that there's a possibility that's going to reverse from here. Okay, other thing that I am doing that is supporting this analysis is combining this with Fibonacci levels. Okay, so whenever you do an analysis, 1.389, sorry. Okay, so the 1.45 fits nicely there. Although 1.45 is not a level that usually price reverse on, it is still a level to consider. Let me see what else I can combine there. So what I'm trying to show you is that how to find a setup is to combine different technical analysis, which I will not be able to teach you guys in one webinar today. You have to come back if you want to learn the rest of it. You're going to combine all of this together. And then the area with the highest confluence, okay, is the area you get in for your entry. Your take profit is where the last swing high and swing low is, and your stop loss will just be above that area you think price is going to reverse. Okay, so right now I'm biased that price is going to go down. I will show you guys in a while why I think that. Okay, no, Ichimoku is not agreeing. Stochastics. Okay, we can use stochastics. Stochastics is kind of agreeing. Okay. Okay, guys, I'm gonna run through again why I think it's a sell. Okay, so number one, overall, I think gold is a buy. Okay, overall, I think gold is an uptrend. Why? Because of the break of the channel and the break of the swing highs, the swing highs here and the break of things. But the thing about any chart is that it never goes in one direction. Before it keeps going up, it needs to pull back once in a while. Okay, so I am expecting a pullback. Why? Because a pullback meaning we're going to get in for a sell. Because number one, for our topic for today, Heiken Aishi is showing that there might be a trend reversal. How is it showing that? Again, I said because when they are wicking on both sides, that is Heiken Aishi's first sign to you as a trader that there may be, I'm expecting a pullback as well. Okay, nice, Musa. There may be a possible trend reversal. Okay, so Heiken Aishi is already signaling to us, yes, there might be a trend reversal in this exact area that we're looking at right now because of the 1, 2, 3, 4, 5, 6 candlesticks that looks like a doji or looks like a spinning bottom. Okay, number two, why do I think that it's going to be a pullback? there is a Fibonacci level here. Okay, so I don't usually take you guys for these webinars. Okay, so you probably would have never heard me give you this analogy. Okay, so this is a very important analogy. I use it every time when I'm training. I think about it very often. Okay, so pretend this is you. Okay, this is a really badly drawn statement. You're going in the direction, you're going in the right direction. Okay, you're going right, you're walking to the right, you reach a door. The question is, if you can push the door, you can go into the next room. If the door is too heavy, if the door is made out of titanium, if there's a lot of rocks, there's a lot of boxes, there's a lot of obstacles behind the door will be, or if the door is locked, the door will be too heavy and you will have no choice but to reverse. Okay, but to reverse. Okay, so this represents price. The man represents price. The direction represents up or down, whether you're buying or selling, and the door represents support and resistance. Okay, so price right now is at our door, which is the resistance. And I do identify that there is some form of resistance at this door. Okay, why? Because number one, there's 145 Fibonacci extension here. Although 145 is not a typical level that we look at, okay, it is also still something we should be considering. Okay, so I'll give you an example. Let's say in real life, you reach a door, you're trying to open the door, and you're wondering, oh, how come I can't open the door? Turns out on the other side of the door, there is a tiny lock. Have you seen those really tiny lock, those toy locks that you can break open with your hand? Okay, so this 145 Fibonacci extension represents that really weak, fragile lock. Although it's not a very strong Fibonacci level, I'm still going to leave it there just to say that there is some form of resistance. So that being said, I do think price is at an area, is at a door, and price is trying to push this door open. If price is able to do that, then it's going to break and price is going to go higher. But if price is not able to break this door, it has no choice but to reverse, right? Okay. Why do I think it's going to reverse? The resistance that are showing right now is the candlesticks showing that reversal pattern. Number two, the Fibonacci level. Number three, there was something else. There is a little form of support and resistance in this area. Okay, it's not the best horizontal support and resistance, but there is some kind of support and resistance here. Okay, because we can see that price came here a few times. Every time it came to this area, it came here, it reversed. It came here, it reversed. In this area, didn't respect. It came here, reversed. So now it's back in this area. Is it going to reverse or not? We don't know. But so far, the chances of reversing is it's there, but it's not the best. Okay, so the next reason why I think price is going to reverse there is because on the stochastics, we are seeing that price is reaching a resistance. So how we use stochastics is we identify support resistance. It is now at a resistance. We expect it to reverse at a resistance. Okay, that's as simple as that. When I look at this setup, how confident am I that this setup is going to work out? I'll be very honest. I don't think this is a very strong door. I think there is some kind of resistance in this door. But if this person here is strong, that means if this bullish momentum is strong, it will not have a problem breaking this door here. They will not have a problem breaking this resistance, and it's going to go higher. Okay, but that being said, the Tenkan Aishi is already showing weakness in the momentum. Okay, it's showing that this person that is pushing the door is maybe tired. Maybe he already pushed a lot of doors. Look, he already broke this channel. He already broke this swing high. Maybe he's tired. So by the time he gets to this area, he needs a little break, and he might just reverse to this area. And then from here, he'll try again once he's fully rested, right? But this current point of time, we are seeing weakness in that bullish momentum. Again, take note that my overall bias is that price is going up. Price is bullish. It's just that at this current point of time right now, there is some form of weakness. So you can consider getting in here for a sell. I personally have a pending order ready at 1784. Okay, because I think the bullish momentum right now has weakened, and I don't think it can break. I may be wrong. If I'm wrong, then I'll just hit my stop loss. That's totally fine. I'll just move on to my next trade. So the thing about trading is there's nothing to do with like a feeling. There's nothing to do with, oh, I feel like price is going to go up or down. You just collect whatever information, technical analysis or the charts is showing you, and then you make a decision. So based on all the decision that I've collected, I am a little biased that the bullish momentum has weakened and there's a possibility of a short pullback, a very short pullback, okay? A short pullback means that if you get in here for a sell, don't expect it to go back down to 1,500, okay? A short pullback means a very short and small move. It's just enough for you to make some profit, and then move on to your next trade. Okay, so let's say this trade were to work out. We are looking at a let me see what's the risk to reward. Because our stop loss is so tight, our risk to reward will be somewhere about 1 to 2, okay? 1 to 2. That means if you have $100,000 account, you're risking $1,000 to make $2,000. So if price really goes to our stop loss today, we'll be losing $1,000. But if it goes to our take profit, we'll be making $2,000. Okay, so these are the kind of trades that you will be able to get. Honestly, if I have to rate my confidence level in this, I would say it's only a 60%. Why? Because usually I don't like taking trades that are going against trend. So right now the trend is definitely bullish, right? We are very biased that price is bullish. Okay, we are biased that price is bullish for sure. So going in for a sell is like going against the wave. So if you are taking this trade, please be super cautious. I do have a pending order here, but my lot size is smaller than what I would usually risk. Okay. Usually I will risk 1% per trade, but because this trade is going against trend, my risk becomes 0.5%. So let's say I have a $100,000 account, I'm risking $500 to make $1,000. Okay. And that's exactly how you would be able to find a trade using the Heiken Aishi, which is right here, combining it with indicators, Fibonacci levels, combining it with trend, combining it with other things. Okay, I hope to see you guys tomorrow. I will be taking you guys for the live trading analysis session. The live trading analysis session, I won't be using Heiken Aishi. I'll be using the strategy that I normally use. I do use Heiken Aishi once in a while, okay, but then I usually on a daily basis, I just use the traditional Japanese candlesticks. Okay, look, the traditional Japanese candlesticks is showing bullishness, okay, but Tenkan Aishi was showing bearishness. Okay, so I will see you guys tomorrow. If you guys are joining, hopefully we get to find some trades tomorrow. Hopefully we get to make some shopping money tomorrow. I'll see you guys tomorrow. Bye guys, thanks for joining. Bye.